Mayuresh Joshi is with us, Head of Equity Research at William O'Neill. Mayuresh, good to have you with us here. On JSPL, is there more to go on the downside in the coming days, or you think it'll stem here after the fall?
Afternoon, Prashant. I think for all the reasons that Nigel has enumerated, I think a large part of the accentuated fall that you've probably seen post numbers and the capex plans that they have announced should largely now start getting gestated in the price. Because to a large extent, what JSPL produces, the specialty steel, the realizations are a tad bit better than the normal peer comparison products that peer companies do. Obviously, I think the concern that Nigel flagged and what the street probably has is the burgeoning debt onto the books. And with the kind of increasing capex that they will undergo, obviously earnings might be a little bit subdued in the next few quarters to come. How the Chinese recovery possibly happens, what part of the overseas operations for JSPL contribute specifically on the operating front. All these factors are to be seen. A couple of quarters back, we were talking about strong deleveraging happening on the balance sheet. Now with increased capex, the kind of numbers that can probably come through as capacity start building up can be a little bit on the softer side. So yeah, I think a large part of the fall largely done with, but it largely now rests in terms of how earnings will largely.
Mayuresh, what's your view on HDFC Life? You know, that stock was doing quite well. Plenty of pessimism was built into the stock price and then it had a rally. But from the recent top, again, it's down 10%.
To a large extent, Nigel, if you stack up all three life insurance companies, HDFC Life, ICICI, SBI Life, obviously the hit because of budget changes in the last financial year is something that the management has taken in its stride. And therefore, the new products which will come through will be a little bit margin accretive as far as the product mix is concerned. Having said that, the VNB margins have held out pretty well. What really happens in terms of the premium growth is something to be seen. And that is going to be the crux of the deciding factor for all these stocks under consideration. However, if you stack up the entire OPEX element to the overall revenue, HDFC Life, ICICI Group has still one of the highest payouts, including commission payouts, and SBI Life probably stays at the lowest bracket. The kind of network also is of consideration, and therefore the bank insurance tie-ups with all three having very strong parentages. SBI Life a little bit on the higher side because of the sheer network that SBI has. And therefore, if you probably stack all these factors, VNB margins expected to be stable, relatively better for SBI Life, the product mix relatively better for SBI Life, and therefore the kind of provisioning that SBI Life has made, along with the lowest commission ratios and payouts as well, I think that probably might just stand out. But generally, I think we'll just wait and watch for the entire spaces.
Mayuresh, what is the internal view though? Is the market going to retest last week's lows, go even lower?
I think our take, Prashant, is that we will wait it out because the mechanism that we probably follow, we're waiting for a follow through rate. So I think 18,800 becomes extremely critical. If that cracks, maybe it heads lower as well.
No, absolutely. So yeah, as we were saying when we started, I mean, it's not incrementally a lot more, but I think we were down about 60 points when we started. We were down, some more, 90 points or so. At one point we were down 100. The low last week was 18,837. So we've gotten closer to that particular level by the end of today's session. Mayuresh, thank you very much for joining us. Good speaking with you. It's a pleasure.